Good morning, Mark Soderberg with ADM Investor Services with a quick summary of today's USDA production and WSDA data. On the surface, today's numbers look to me supportive for both corn and soybean prices. Rather neutral here for wheat. Corn and soybeans production was cut more than expected, particularly for the soybeans. And prices have initially responded accordingly. Let's dive right into the numbers here. Corn production, 15.143 billion bushels. That was down 60 million from the October report, in line with expectations, but just slightly below the average trade guess. Yield was cut from 183.8 to 183.1 bushels an acre. Still a record yield, but not a record production. On the soybean side, production was slashed 121 million bushels to 4,461 million. This was about 95 million bushels below the average trade guess, and came in about 30 million bushels below the lowest production in the range of estimates. Yields were cut to 51.7 bushels an acre from 53.1. So no longer record yield, no longer record production. So late season heat and dryness across much of the nation's midsection obviously took a toll on production. Most states did see a reduction in yields. I'll just rattle off some of the highlights here. Missouri was down 4 bushels an acre from October, Iowa down 3, Illinois down 2, Minnesota down 2, Wisconsin down 4, and 2 bushels an acre reduction in both Tennessee and South Dakota as well. On ending stocks, corn ending stocks, 1.938 billion bushels. That was very close to the average trade guess. To me, I thought I was expecting higher usage estimates to cut into stocks a little bit more. The USA made no changes this month to the corn demand side of the balance sheet, that despite both ethanol and exports running well above the pace needed to hit the current USDA estimate. So I do look for further cuts in stocks, higher production down the road, and I think that will keep prices well supported, and wouldn't be shocked if we make another run at the day's highs here. On the soybean side, we did see a little bit of a cut in usage, down 41 bushels, left ending stocks at 470 million. Exports were cut 25 million bushels, as expected, given what appears to be a huge crop brewing in South America. Shocking to me was the fact that they cut the crush number 15 million bushels. I was looking for a 10 million bushel increase due to this huge increased usage we're seeing in soybean oil, notably with yesterday's export numbers, and we're seeing a strong pace to usage in biofuels as well. So I do look for higher crush down the road. I think it has limited the upside here so far today in response to the much lower production and lower stocks. 470 million bushels, not that big of a jump over last year. Not many changes here on the global side of the balance sheet. We did see 1 million metric ton cut in Brazilian corn exports. We did see a 500,000 metric ton cut in Russian wheat from 82 to 81.5 million metric tons. No changes to the Chinese soybean imports. We did see the Chinese corn imports cut 3 million metric tons, but no change in usage. It's just impacting stocks down the road. It's a little bit tighter than expected. And shocking to me, we did not see any changes to the U.S. soybean oil usage, despite the fact, as mentioned, the exports running very strong, and as well with the usage for biofuels. So firm it back up here a little bit. Again, I would not be surprised to see it make another run at the highs, but upside might be somewhat limited given the lack of a weather problem right now in South America. Thank you for listening, everyone, and have a great day and a great weekend.